Hello everyone, this is our week 3 in our MBA 504. I'm going to continue our discussion with the financial statements and analysis. So today's focus, read the class notes. Okay, we'll be focused on the class notes from slide number 30 to number 67. And I want to remind you to focus on income statement and the statement of cash flows. We have a section about taxation, but it will not be in our exam. Our exam number 2 is during the end of this week. Okay, and so first of all, I'm going to briefly tell you how to construct. That's a balance sheet we discussed in week 2. In week 3, we are going to construct the income statement and the statement of cash flows. So first, income statement. What's the definition of the income statement? It's about the company's profitability over a period of time. For example, a quarter or a year. Well, remember, for balance sheet, it's just one point of time about the company's financial positions. So for income statement, I usually say it's a top to bottom flow chart. Think about your own personal finance. Each month I break even, or each month I owe some money to my creditors, or each time I have some surplus. So same thing for the company. We will check our income versus our expenses, and to see if we would have the net income, some profit, or will suffer some loss. So we start with our income, which usually is our sales revenue, sales, minus cost of goods sold. And usually that is called the gross profit. I consider, or in my eyes, the cost of goods sold is a direct cost inside the firm related with our production. And of course, we also have some costs that is indirect cost inside the firm. They are, in general, research and development cost, sales, general administrative costs, and depreciation. Or amortization from our long-term assets. These are all indirect costs to our production, but that is inside our firm. As a result, we'll have our operating profit, all about our main business. You can add in some other income. The company may have the other income or may not have income, the income like from investment activities. I can receive dividends. Okay, then right now we will have EBIT, earnings before interest payment and taxation. Then minus interest. Interest payment to our creditors is a outside cost, outside the company to us. From we pay the interest to our creditors. Then we have either taxable income or EBT, earning before taxation. We know that in the US, people say that there are 2 things you cannot avoid in your life. One is death, the other one is taxation. And that is another cost to the company from outside. And that is to the government. Finally, top to bottom, after subtracting the costs, we have net income, which is to our owners, share holders. And this amount of net income usually has 2 paths to go. The first one is to pay dividends to our shareholders. So it will leave the company. Another one will be retained earnings. That belongs to our shareholders, but will be designated to shareholders' equity under shareholders' name. That's the income statement.